Hi, what's up guys, and welcome back to another free trade portfolio update. Now I think this one is the fourth video that I've done. Again, I'm going to be focusing on two new stocks which I have invested in, and it's going to be a pretty cool video because one of the stocks I sort of messed up my entry point, and I've got one of my good friends, he's going to jump on the video with us and show us a little bit about technical analysis and how you can actually use it to gauge whether you're entering at a good point into a long-term investment. Now, my channel is mainly about fundamental analysis. I don't really do any technical analysis because, as I said, it's long-term investing. So I'm looking at the future market growth, the future health of any business which I'm investing into. And that's what I base my decisions upon. But I thought it would be good to get them involved, and let me know in the comments, do any of you guys actually use technical analysis to enter long-term positions, or do you just base it on fundamental analysis? And as always, everyone, if you want to get involved in the fun and start your investing journey, you can do so by following the link in my description to the Freetrade platform. If you use that link, you will get a free share upon signing up and depositing £1. Your share will be worth between £300 and £200. It's important to know I will also benefit from this by getting a free share, but I mean, it's a bit of a no-brainer really, come on. But anyway, with that out of the way, let's get on into the video. So the first stock I want to cover in this video is OKTA. Now, OKTA is a cloud-based tech company that was founded in 2009 and based out of San Francisco. They specialize in access management tools. So to give you a little bit of an example, big corporate companies would use this, and it requires their employees to link their phone number to OKTA Verify, which is their app, and it will allow them to verify their identity and enable them to log on to all of their companies, like private databases, applications like internal messaging services, or customer relationship management tools. So it basically stops the need for employees having individual passwords for all of these different apps, which of course then mitigates the risk of cybercrime, and also it reduces the amount of tickets raised for password resets for the internal support of any organisation. Just after I entered my position into OKTA, the stock price rocketed up. Now, I think I was quite fortunate with my timing. The reason for this huge spike in the stock price, I say huge, it's about 8% in like 2 days, which is pretty significant. But essentially last week they had a conference and they announced that they are essentially expanding their product portfolio, which now means that addressable market as a business is worth up to £80 billion, and previously it was only 55 billion. So they have huge plans for growth and diversification and innovation, which are attracting a lot more investors to the long-term prospect of the stock. Now, this is also coupled with the announcement that they are targeting and expecting 30% year-on-year growth to at least the year 2024, which is absolutely huge. So I essentially, I want to be part of this growth, and I really do believe in the company. And as I said, I really do think it goes hand in hand with the cyber industry as well. Cybercrime is rife, as I've mentioned in previous videos. If you took the whole cybercrime market as a whole, how much it costs businesses, it would be the third largest economy in the world. So of course, companies need to use tools and software like OKTA offer to mitigate against the risk, essentially. And that is the reason behind my long-term position in OKTA, which I've started off quite small, but I'm going to cost average in to the stock to a holding, well, I hope of around £1,000 within the next couple of months. And Another key reason why I love OKTA as a business is their partnerships. Now, they are partnered with huge other software companies which other corporate companies use for their business ecosystem. For example, I mentioned earlier Salesforce, Slack, which is an internal messaging service, and many more internal applications. So OKTA have partnered with them to allow businesses to use the OKTA Verify app to enable quick signings and reduce the amount of password reset tickets and so on. And that is why I think their growth is going to keep going as well, because they keep developing their partnerships. They are essentially going to be the one-stop shop for access management for the whole business network. Okay guys, so my second investment this week is in a software company called Vertex. Now, they specialize in cloud compliance tax software. Yes, taxes are very interesting. But no, essentially the company was founded in, I believe, 1978. Probably massively got that wrong, let's double check. I was spot on. They were founded in 1978 and have evolved into a tax cloud compliance software. Now, they allow businesses to automatically calculate and remit taxes that they owe to different jurisdictions in the US and of course different countries around the world, dependent on their online sales and so on. The company has really grown and gone from strength to strength alongside the growth of e-commerce. Now, e-commerce has gone absolutely mad, particularly with March, with the start of COVID. Most countries went into lockdown, which led to people shopping online. This caused a real boom in people obviously using online websites. Now, these online websites, they need tools to detect where their buyers are buying their products from, and then obviously collecting and paying any taxes which are due on those sales. Now, this is where Vertex comes in. They solve that problem for businesses, and that is essentially one of the main reasons why I think this is a good investment. Now, that bit of spiel is actually supported by the fundamental data of the market. So in 2019, the global tax compliance cloud software market was worth 15 billion. Now, in 2021, it's projected to be worth 27 billion. Now, that is insane growth. And it's growth, like I say, of all my stocks, is what I want to be a part of. And that essentially is the main reason for my investments. And as Benjamin Franklin once said as well, nothing can be certain in life besides death and taxes. Taxes are not going anywhere. Companies need to pay them on all of their sales, potentially. It depends on what the setup is like, of course, but bottom line is they're going to need to pay some sort of tax, and it can be a nightmare. If you're trading across multiple borders, trying to comply with different tax rules, it's actually ridiculous. So this is where Vertex comes in. They automate the process and remove that tax headache. And for that reason, I believe this company to be a great long-term investment. And also, I just wanted to add, in the UK with HMRC, Her Majesty's Revenue and Customs, they have a big initiative at the moment, which is MTD, making taxes digital. So this essentially enhances the demand on software companies which digitize the tax journey, such as Vertex. Now, UK are sort of leading the way with the rest of the world with this initiative. So I believe it's only a matter of time before the rest of the world follow this. And for businesses to collect, file and remit taxes, they will have to use a form of cloud compliance software. So that government incentive is only going to increase the demand going forwards as well. Now, when I entered my Vertex position on the Freetrade platform, I had a bit of a shocker. So I invested some money into it, as you'll see. I'll pop it up on the screen, and I kind of got screwed over, and it dropped around 11%. I was, scouring through the internet for possible reasons for it, and I couldn't find a single ounce of information which correlated to that sort of drop in the stock price. So, but what I could have done in this situation is performed some technical analysis to gauge whether the position that I was about to enter was a good entry point. And if I'd done this analysis, I would have uncovered that it was potentially a risky move because there was no confirmation that the stock price was going to go back up and break the resistance levels that were in place. Instead, it plummeted past the support line and just kept falling off a cliff. So I've got my good friend Mark, who I'm going to change over to now, and he's going to show you his sort of form of technical analysis on the Vertex stock and how you can implement that with your investing strategy.
Okay, so George has asked me to look at this stock price from a completely technical perspective. So no fundamental bias whatsoever, just look at price action and see whether or not, had George used any technical analysis, could he have got a better entry. So we're looking at the stock on a 4-hourly chart since it IPO'd till market close on Friday. The only annotation that I've added is a little blue cross here, which is exactly where George entered the market. So let's take a look. I always view these, price action is mass psychology depicted on a chart, and it tells a story. So we're going to paint the picture, and we're going to use some points of reference. And the first thing that I will always add is my key areas of support and resistance. So where has price been held up or kept down? Effectively, what price level has the market respected and reacted to? This purple line or purple rectangle that I've just added is a key area of support. We can see that market opened, came down to this level, very, very aggressively bounced off it, wandered around, retested it once, twice, 3 times, and then we're off to the races. So this is a key area of support. We can also see that it's, all the way forward to March 2021. We can see that after its huge, lovely move to the upside and this lovely upward trend that was broken here, we can see that it broke past this and then came back and found support there again. So this is a key area. Found it twice. It bounced off it, came back up and bounced off it again, that we can see. So that is a key area of support. I can see another one that I want to add here. So again, another area where the market has respected this level and reacted to it. So bounce off here, all the way around, bounce, bounce, messed around a little bit, and then broke below. But quite often, more often than not, we will see that support, when broken, can also act as resistance. And a really nice example, before I show you how we get into the nitty-gritty and look at where George entered, this is a classic example of when support and resistance are almost interchangeable. They're key areas that the market is respecting. So why won't that move? Bear with me. So we can see here, resistance. Price action tried to get to this level, was rejected, came back down, found that support, came back up and was rejected again. So this is a key area of resistance, and it's no surprise it's at the sort of $30 mark, so a really psychological level. Are you going to break out of the 20s and are you going to go into the 30s? And when you do, you often see what we can see here, really strong impulse to the upside. So the bulls are thinking, right, fantastic, let's go for it. Everybody's piling in. You get this big spike, price action moving dramatically, going from 30 all the way up to what, $37. So a huge increase. But like with anything, the bulls want to take their profit. So we'll see a sell-off and we can see the market come back down. Where does it come back down and where does it find support? no surprise, this previous area of resistance. So I just wanted to show you that because it's a beautiful example of when resistance becomes support. And that can be also seen exactly where George entered the market. So if we zoom in here and have a little look at what happened here, we've already drawn in our key areas of support and resistance, so where the market is respecting it. Price came back down, bounced off this support, bounced off this support, got a little bit gnarly and wiry, here, wasn't respecting that level, broke this area of former support, found support at that ultimate key level of support that we found earlier. Sorry, I'm saying support and resistance a lot, basically the purple lines. So yeah, found that, respected that, came back up. Now this is where it gets interesting because it came back up and we can see in this candle here, this wick, we call it, so that thin line above the body of the candle, that's really strong rejection. So we're seeing that price has bounced off this area of support, it's come up here and met former support, now acting as resistance, and we can see that by the rejection that it faced. But it gave it another go, the bulls gave it another go, it came back up, we can see here, quite a nice bull candle, but it was rejected again and it came back down. So this, although my blue cross for some reason has disappeared, this is where George entered the market. So just by looking at key levels of support and resistance, we could actually say, George, you should have waited to see how price reacted to this level. So not an ideal place to buy. What did it do? It broke down and then we got a huge gap. So market gap here. And it broke below this key area of support, the biggest area of support that this share price has seen since it's open. And it's broken below. And as it's drifting into no man's land, but it's no coincidence. Again, it's found support at a key psychological level, which is the $20 mark. So roughly here. So we'll have to see how it reacts. Is there any more analysis that we can add to this? Yes, if we wanted to look at it from a slightly different perspective, we can see that this is clearly in a downward channel. Add our little reference points in here. George would have been able to see this prior to buying it. But if we zoom in on this area, we can see that this is, in a nice downward channel where these areas, these blue lines are acting as sort of diagonal support and resistance, bouncing off there, bouncing off there, bouncing off there, bouncing off there, bouncing off there. So where George, to highlight this, and sorry George, not to sort of drive the knife in, but where George bought was actually really key because it was not only an area of former support now acting as resistance, but it's also, if we look at this blue diagonal resistance line, it was also, that was in play as well. So what we would have wanted to see, and if George had looked at this, he could have said, right, I'm going to wait for a clear break of this purple line and this blue line, and then that might be a nice indication that the market is going to the upside. But had he had waited, he said, right, okay, this is a key area here, really, really key. I need to see what's going on, and I will wait. He would have waited, seen this, this strong red candle, this bear candle, and said, right, okay, the market's going back down. I'll wait to see what happens as it hits this area of support again. And he would have caught this. He would have seen this happen, and then gone, whoa, 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 whoa. We're dropping past a really strong area of former support. Maybe we should wait. Maybe we should reanalyze the situation. Okay. So that's what it looks like from a technical perspective. Sorry, George, I've gone over my 5 minutes that you allocated. I will pass it back to you. Hopefully see everybody again soon for some more fun and technical analysis. Bye for now.
Thank you very much for that, Mark, and that just about wraps up this video. So if you enjoyed the video, I would really appreciate it if you could smash that like button and obviously subscribe to follow my journey and see how I really get on with my free trade portfolio. So yeah, hopefully I'll see a few of you in the next video. Cheers.